Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me on the show, Jim.
Chris, the safe havens, are they still getting hit up? What are the safe havens, and what kind of actions taking place in them right now?
Yeah, well, we've been expecting some pretty big moves in the safe havens, which are more or less precious metals, mining stocks, bonds, and utilities. And, through all of August, obviously, we know that big trading range that the stock market had. Whichever way the stocks were going to break out of that sideways range, which is either to the upside or to the downside, is going to directly affect what happens with the safe havens. And of course, stock market, the SP 500, the Dow, all the major indexes broke to the upside. And with it doing that, more or less, investors are going to pile back into the risk-on assets, equities, and they're going to start selling their positions in the safe havens, so they have cash to put into stocks. So once we saw that breakout, we saw the safe havens really start to sell off and correct in a pretty big way. And yesterday, today is the first sign where we're just starting to see potentially that flush out in the safe havens start to carve out a bottom. Utilities gave us a nice early warning sign yesterday, and today we're seeing utilities really take off, and along with the miners. So I think we're starting to see this kind of oversold safe haven kind of pullback start to put in a bottom here. I think it's going to take another week or so, sideways chop, but overall, I think most of the downside for the safe havens are done going forward here.
Mm-hmm. So if the so-called safe havens aren't so safe anymore, is there any other play that you should be looking at?
Well, I mean, right now you need to kind of be long equities. Equities have broken to the upside. We've been playing the long side using the small caps. Small caps really just started to take off yesterday and today, and so we're long equities. But there's not a whole lot of upside left. A lot like August, we're limited with what we can do at this point. My feeling is you need to be long equities. I think they could still move higher. And but I don't think there's a lot of upside. The way the market broke out last week and really popped and took off, most of the upside gains for a nice, easy trade is pretty much done. If you were to look at the SP 500, I mean, we're getting close to that 1300 area. That was kind of the 1300 to 1325 is kind of the upward target of where this momentum, this pattern should go, and we're pretty much there. So I really feel like we're kind of limited in what to do right now. I think you needed to play the breakout in equities, and now we're just kind of letting things mature. I think we're going to wait to see if the equities market puts in a topping pattern, a reversal bar to sell back down. I think that'll happen over the next week, and I'm waiting for more or less the safe havens to try and form some type of consolidation that gives us a signal that it's either going to continue to sell off and stocks are going to continue to rally, or we need the safe havens to form a bottom and start to rotate to the upside. And that would give us a sign that, okay, we need to be back in the risk off, metals, miners, bonds, utilities, and start to look at potentially a short play or an inverse ETF on stocks. So we're kind of stuck in this play where we've had a really nice move the last week, and now we're at the end of it, and we just kind of let these kind of moves mature a bit, and there's not a whole lot we can do at this point.
Is this the time to be really cautious? Because traditionally, if you're going to have a massive move downward in the market, it happens in September or October.
Yeah, and that's very possible. I mean, if you were to look at the SP 500, really going back to April of this year, I mean, we've got a potential big topping formation unfolding, which could be called as a head and shoulders formation. And the time-wise, it's starting to span. By the end of this month, or really the next couple of weeks, we could easily see the market top out and start to rotate down. And it would be a classic signature head and shoulders formation, which is bearish, which means we would be pretty much breaking down and going to test down to the lows around 2,600 on the SP 500. It'd be a big drop from where we are now. So I think there is a lot of potential for selling coming in the next couple of weeks. And I think that's when safe havens will be, firmed up and they've built a base and they'll be ready to take off. So I am bearish looking forward several weeks from now, but right now we're still in an upward momentum play, and we just have to let this kind of stall out and see if it's going to build a consolidation for stocks to go higher, or if we're going to get a little topping formation and see eventually the stock market roll over, much like we saw in August and in May. We could very easily see it just roll over again and head down.
Are we getting enough of little corrections that we won't have to have a big one? And was the 20% drop at the start of the year a good enough one to kind of stabilize the market so you only have minor corrections and nothing serious?
I think it's a good argument. I do think we've had enough big corrections when you look at the big picture that, you could argue it's cleansed the market to some extent, but, we really had that big run from 2009 up into 2015, and the size of the run that we had there alone, I don't think we really had enough of a correction to fix that. And then Trump got in, and we've seen this second massive bull market leg to the upside. We are seeing really big volatility. That 20% drop was huge. But in the grand scheme of things, when you look at the big rally we've had since 2009, we could very easily be setting up for a huge correction. But I completely understand your point of view. We have had enough corrections in volatility that it could cleanse the market. But when you go like the PE ratios and you see what's going on, things are just way overvalued. We haven't really had that cleanse of all this, the markets or shares being overbought yet. It hasn't done any of that. So, if I look at the monthly chart and look at the chart pattern, I mean, it is setting up for what could be an absolute bloodbath at the end of this year or 2020. I mean, the markets, to me, are still primed and ready for something really ugly. And I hate to say it, but it could be worse than the 2018. I think it could be a very dramatic drop in price and get pretty ugly. So that's the nice thing about being a technical trader. It really doesn't matter what it does. We simply follow these trends and, we'll only be wrong for a short period of time, and then we're back on following the new trend. So as long as the trend continues beyond, a week or two, I mean, we're completely happy with whichever way it goes. So that's kind of the benefit of trading technical versus fundamentals and, trying to, front run the market. We just follow it, not try to predict it.
We'll have more with Chris Vermeulen right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, we've had a bit of a pullback in precious metals. Is this a brief pause before another charge, or could we see further reductions?
I think this is a pause before another run. I mean, we are in a bull market for precious metals. Market never goes straight up, and we could see something a lot like we saw earlier this year in February, where the market rallies up, and then we see a 3 or 4 month sideways consolidation. There could be a big breather. Either way, I'm still very bullish on metals. In the short-term basis, they are in a downtrend here. They're still trying to carve out a bottom, and I think it's going to take a week or two for some base to build, and it could extend, who knows, a couple of months. That's what we never know how long the market is going to drag out a pattern. But the grand scheme of things is it's in a bull market. The trend is up. The long-term bias is to buy these dips or pauses in the market, and I think we'll be fine going forward. But I mean, I think you need to still be aware that they're in a downtrend right now, and if the stock market does continue to push higher for another week or so, we could still see a pretty good correction and pullback in miners and gold, silver going forward. So you got to be really alert if you're a short-term trader that this selling we're still in a downtrend, but looking forward as a long-term investor, this is nothing but a healthy pullback and a pause. It got a little frothy, a little overbought, and this is just some profit taking in the market.
Should the gold miners be doing better right now, the stocks?
I don't know if they should or not. I mean, they are doing pretty darn well. They're definitely, outperforming equities in general. They've had a huge drop over the last 4 trading sessions. I think there will be a time where they're going to go ballistic again, but if you look at the technicals of the gold miners, the gold miners bullish percent index. This is an index that says how many gold miners in the whole universe of gold miners have a bullish pattern. And I mean, last week we were at, I think 100% of them had a bullish pattern. And this index oscillates from, 100% of them being bullish, meaning everybody's buying them. It's a no-brainer. Everybody's moving into gold, usually signals some type of pause or top in the market. And then we look for some type of big correction, and we start to look for, 50% of stocks or more, or less actually, having a bullish percent. And that's what spooks people out. So we're overdone. Everyone is in metals, metal in the miners. And that's why we've got this, what looks to be a pretty violent topping formation. And I think it has more room to sell off and crash here before it fully cleanses over the next week or so.
We'll have more with Chris Vermeulen right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, any action in the crude oil market?
Crude oil, it's got lots of action. And I talked about this with subscribers actually this morning in my analysis video. Crude oil, to me, I really don't have much insight on it. It has been in a really volatile, choppy range. There's a lot of support and resistance areas really close together. I'm not a huge fan of the price action of of crude oil, but where I actually see some really interesting movement is the natural gas. Natural gas came down and tagged around our $2 low that we were expecting to take place, and it's rallied all the way up to our major resistance level at the 250 area. So out of the energy sector, I haven't been really focusing too much on crude the last couple of weeks. I don't get any insight on that type of price action. I don't like to trade noise like that. But when you go to natural gas, we've had a beautiful bottoming formation, a nice launch pad created, and then we've just seen it scream to the upside, and we traded that for a beautiful gain. We're now out of natural gas. And natural gas, I think, is primed and ready for a bit of a pullback. I think we could see it's at 255 right now. I think we could see it come back around to the 235, 240 area. And I think natural gas will set up for another great buying opportunity after it takes a bit of a breather. So on the energy side, natural gas, UNG type of ETF is a great way to play it once we see some type of correction here.
Bitcoin, is it still moving up?
I like Bitcoin. I mean, the pattern that it has formed is extremely bullish at this point. It needs to break to the upside of this pennant formation. If it does, the next upside major target is actually 20,000, which is where it topped out, a year or so ago, 2 years ago. So it's got a lot of potential. If it breaks to the downside, then we're going to be going all the way back down to most likely around the $5,500, maybe the $5,000 level. So I've got my eye on it. It is trading in a very narrowing range. The longer a pattern goes into a pennant formation into a point, the more risk you have. You don't know which way it's actually going to break. Generally, you want a pattern to skyrocket, start to form a consolidation, and then just continue to go, break out and run. You want to see it go early. You don't really want to see it squeeze into the apex because it becomes more unstable, and you really don't know which way it's going to go at that point. So we got to keep our eyes on it. The upside, there's still a bias there. The longer-term trend is up. If it breaks to the upside, I'd be looking at 12,000 for the first target, 14,000, and then be looking at 20,000 for levels to be pulling some money off as it goes to the upside. And if it breaks down, you'd be looking around the 7,500 and the 8,000 and around the 6,000 or 5,000. So got to see where it's going to break out, but there's a huge move looming right there. It's just a matter of which way is it going to break, and is it going to break in a way that we can actually trade it. Sometimes these pops happen in like seconds, and you'd hate to chase a move when it just rallied $1,000 in 5 minutes.
Chris, thank you so much for chatting with us.
Hey, thank you, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen from the technicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.